Okay, fam, welcome back. So today we're going to be talking about our recent trades as well as the markets. So with that being said, let's get it. Okay, so we'll start with M1 Finance because of, again, the whole time security thing on here. But we did actually buy another 2.18 shares here, as you guys can see, at an average price of 18.35 on PDI. Again, the whole goal behind this thing is to get the two positions, well, two for now at least, positions that we intend to buy on this particular portfolio to a minimum of at least $30 a month. That still remains true. That is PDI and ACP. As you guys can see here, we have all these other ones too, but we're just going to hold them for now until eventually the price gets back into the profit, and it will eventually happen at some point. It always does. It's just a question of how long it's going to take. So take a look at PDI real quick. We do have a total net positive return on this. Again, the dividends and or the price appreciation / drawdown, that's what creates the total return. That's what we care about, is whether we're positive or negative on the total sense. We are positive here, as you guys can see, even though the price is down. Okay, so we got 135.66 shares as of right now at 2031. And again, the price is below, the market price is below the cost basis that we have. So that's how we're looking at this. I mean, the other positions, we can still buy those too. They're pretty cheap, but we already got them to the benchmark, and a lot of them are tied to the indices, whereas these standouts, which is BSTZ, PDI, and ACP, they're at fair value on the charts. Again, we'll post it later, but on X, but they're pretty much at fair value compared to the NASDAQ and the S&P being overbought on the daily with potential pullback. The pullback is where we would ideally want to be looking to buy more. So as of right now, it sits just slightly below 30, so we are getting there. Again, ACP, that's still kind of up in the air. We may replace that with something else depending on whether they have another dividend cut or not. Okay, so let's I don't want to get too digress too much here. So yeah, let's just start with the trades, and then we'll go into the actual charts, and I'll kind of explain everything that's going on here. So QUBT, we did actually sell a little bit of this morning. Again, the covered calls are on, so we can't really sell. We would have to pay money to get out of the contracts that we have in order to sell the underlying shares of QUBT, but they are actually massively in profit right now. It would have been more than this if we had not sold the other 37 shares. But again, I mean, our entry was at 11.35. We have these kind of stragglers here that we just happen to have as extra as part of the investment of the 2,700. So we decided to sell them. I mean, they're up $2.50 at this point. So tentatively, as of right now, we have actually made the profit, so to speak, because again, the 15% of the initial cost basis here is going to be $405. Again, I have to remind you guys one more time that the minimum of our profit targets is always 15%. If it's more than that, then fantastic. So tentatively speaking, we have made this money, but we're not actually going to count it as profit yet until next Friday when the contracts close, and presumably we are still in profit by then. So, but as of right now, it's looking good. If you guys took this trade, I mean, you're up massively at this point. Even if you got in at $12, you'd still be up quite a bit right now. So didn't think it was actually going to move that much, but we're not going to spend $260 to close out to take profit on this right now. We'll wait and see. We're not interested in giving up any money here. So next thing here is GPIX. So we did buy a little bit more of this. Again, this is one of those three positions that we have not really bought a lot of yet. That's GPIX, SCHD, and BSTZ. So you can see we're now at 7.53 shares. Again, that's basically nothing. I mean, that's maybe a couple $2, $3 a month or something like that. So we have a long ways to go on this. But again, we did buy 1.58 shares and 1.57 shares at 47.32, 47.56. The pullback on the NASDAQ was a modest pullback on the day, 0.6%. I think at the lowest point right around the time that we bought, or close to it, maybe somewhere in here after the slight retrace, we bought. Maybe when this thing was down about 0.75 of a percentage point. So not a huge drop, not the largest drop we wanted to buy on, but a dip buying opportunity nonetheless. So we took advantage of it. Okay, so everything else in here is still the same. Nothing's changed. Everything is still as is. And for the partial profit that we took on QUBT, we're not actually going to open a new swing trade until we get the rest of the money out of this stock. So again, nothing's going to change on that until Friday of next week. That's the expectation here. So SOXL, we kind of split this one up throughout the day. We're kind of off and on. Like at first, we were like, okay, let's just do one put, and then we were taking a second look at the charts and at SOXL and saying, well, the markets are closed on Monday because it's a holiday. I think it's Memorial Day, if I'm not mistaken. So we just decided to hell with it. We'll just open the trades now. 2 contracts of SOXL. And again, whether you're doing a cash secured put or a covered call, the weekend trick that we told you guys about, which is basically if you open either one of those on a Friday, then there will be a theta decay that takes place over the weekend. Because again, the contract technically on a weekly basis is for 7 days, but markets aren't open on Saturday and Sunday, or Monday in this case, right, for this week. So that theta decay will eat away at the value of the contract, which means by default, just having the contract open through the weekend will make it cheaper to buy back. So that's what we're looking at. Okay, so here it is. First one, SOXL $14 put. Again, if it goes below 14 by expiry, we get assigned the shares, which is fine because we can just turn around and do the wheel and write some covered calls. And plus, there is some serious profit potential on this thing because, again, it is 3x leverage, these semiconductors. So $38 in premiums there. And same expiry for the 1450 put here, and that's $37 in premiums on that one. Again, we did this with a little bit less than a 30 delta. So pretty low chance of getting assigned, but it kind of depends on what the market does. Whether we get assigned or not doesn't matter. We're fine with it either way. So that's roughly about another $80 on the day that was made. So in terms of TSLL and Tesla, I mean, these things haven't really gone much of anywhere. We're still looking for a price target of about 400 to 400 and I think it was 425 on Tesla. So we'll take a look at that in a minute. Bitcoin, same thing on Bitcoin. We're basically just looking for another follow-up candle close above. Again, we got that breakout candle. Now we need a confirmation, right? So a higher green candle, second one to confirm the move here, especially above this wick, would be ideal. And we should continue to rip higher. Okay, so before any other charts, first I want to take a look at the NQ. So we had a nice little dip here. What was the reason? Well, basically, as far as I know, and again, allegedly, the Trump administration came out and basically said they wanted to do 50% tariffs on, I think it was the EU, if they didn't want to come to the table and do business, and then 25% on Apple if they didn't want to make their iPhones in America. Do I think the iPhones need to be made in America? Well, truthfully, I don't really care either way. I mean, business is business and making money is making money. Of course, I'm obviously, I think it would be good if they were made in America, but when it comes to finance, we don't really care too much about that. We're just interested in making money off of whatever the circumstances are. So whatever the case may be, it gave a nice dip buying opportunity here, so that's always a bonus. Again, we have had a nice little push up, but into the EMAs, this is bearish. Shorts are going to be wanting to short here and potential take profit for bulls who bought down at these levels here. So we could see a reversal and a further downside. And the fact that the market's only sold off roughly about 1% on the tariff news compared to the whopping 25 to 30% drop we saw earlier this year tells me that the effects of the tariff news is kind of the market's not taking it as seriously anymore. So it's kind of dulled its effects, so to speak, which is good. That means that by itself could convince the bulls that the rally's still on and it's not really a big deal. We just have to wait and see for some kind of breakout above this trend line for me to be convinced of it. We are oversold on the 4-hourly time frame. Again, usually when that happens, some kind of major short-term bounce, but we already showed you this on X, so not going to show you it again. The thing that concerns me a little bit here is the daily time frame. So nice long wick here on the day, which is very bullish. Not really liking the fact that that's a red candle. I would prefer it be a green one, but we get what we get. So it just simply indicates that there were buyers in the market, so we're willing to buy this dip. So the other thing that I want to point out here is that we are tapping this gold line. You can see, again, it has been support multiple times in the past, especially when this has turned into a flip zone from bearish to bullish. But the thing that I would say that probably makes us a little cautious at this point is we are about to get that death cross. Again, it doesn't necessarily always mean Armageddon, but last time we got one of these, it was a pretty harsh sell-off for days and days and days and days. And usually when we do get them, it's kind of a bit of a pullback, especially at a swing high. Like this could easily be considered to be a swing high. So there's that. The RSI is overbought. So obviously the most ideal point is to buy when it's oversold. And yeah, we're a ways from that. So just keep all that in mind. Okay, so the next things that I wanted to go over here real quick was Tesla. So let's take a quick look at Tesla. Oh, before I forget too, I did want to mention that the VIX is back above 20. We'll have to keep an eye on this. Because it's sitting at 22, I don't really see it to be like necessarily terrifying at this point. I think if we get above 30 again, that could be a reason to be majorly concerned. But 20, 25, I wouldn't be too concerned about that. I mean, it could just be a short-term bounce and then we see a sell-off later, which again would be a very good thing for stocks. So next thing I want to go over here is Tesla. Okay, so Tesla still looks really bullish in my opinion. I mean, we are getting ready to push up into the bull territory in the MACD. We're almost there on the RSI, and we're above the EMAs. We got the triple golden cross playing out right now on the weekly time frame. That's extremely bullish. The only thing I would say here is that there is, let's see, where were they? I swear there was two gaps on here. But yeah, anyways, so there's a gap here between 305 to 310. At some point that may get filled. At this point, we don't really care because if the price pulls back, we have the calls put on anyways. So not a big deal. I would just make it cheaper to buy back, or we can just hold the shares for longer, either one. Yeah, actually there is a second gap. It's this one right here down in the kind of 240 to 245. I don't think it's going to go that low, but we'll just have to wait and see. So the bearish divergence is starting to play out. So we got these higher highs on the price and then lower lows or lower highs, whatever you want to call it, on the RSI. So now it's starting to pull back. The question is, where is it going to stop? Maybe down here in the 290s, 295. Again, that gap needs to be filled, and that's kind of where these candle tops are. That would make perfect sense on the 4-hourly time frame, plus the RSI is a little overbought. So maybe an opportunity to throw in some cash secured puts to get them at cheaper prices on either Tesla or TSLL or whatever your preferred ETF is. And again, saw similar formation here on the daily time frame, right? We kind of chopped around a little bit, then pulled back and then took off. So we're chopping around a little bit on the daily, haven't quite gotten that pullback yet, and then we could take off after that. Okay, so the very last one that I want to go over here is QUBT. So like I told you all before, these quantum stocks, I mean, they move like lightning. They're extremely fast in either direction. So keep that in mind. The volatility on these things is absolutely bonkers. It does appear that QUBT is actually going to close above these candle tops and this resistance zone here. Like I told you all before, if we get a breakthrough of this level, it's, again, I could be wrong here, but I think it's game over because this thing is probably going to fly pretty fast up to that next resistance at 17 to 27. Keep in mind, there is this huge gap here between 13 and about 17 that also needs to be filled. That has not been filled yet either. So, and there is this gap below, but at this point it does appear that we're probably going to get a move up to the 17s. I mean, assuming things don't fall off a cliff in the next 5 minutes, which I don't think they're going to, we do have a candle close above on the weekly and the daily time frame. So if you guys are already in profit and looking to make more money, on this position, a bigger move that may happen next week, or if you guys have already taken profit and you've made your money, congratulations. I just wanted to point that out for a closing statement here. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see you all later. Peace.